You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call, around these parts, the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting, at least we hope so, the Options Insider Radio Network. Where do you find all the other goodness if you're coming to this show for the first time? First off, where you been? It's been a decade. Not for this show, but for the network anyway. Secondly, whole network for you guys to discover. Easiest place to do just that, theoptionsinsider.com. All the shows there on the right-hand side for your easy listening convenience, as well as all the great content we do throughout the day, too, breaking news on the options market, education, unusual activity, all that fun stuff. Of course, you can always find us, your platform of choice, iOS, Android, Fire OS, iHeartRadio, Google Podcasts, wherever you get your stuff, Pocket Casts, we're there. Subscribe, download, stream, however you want to get it, including joining us live for this program every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr. MIXLR. So all you hardcores who like to get the stuff a little bit early before it's available to the masses, this is how you do it. And however you listen, after the fact, during, however, via bouncing off the lunar reflection onto a pool by your house and putting it into your satellite dish in Croatia, however you get the program, we love to hear from you guys. So send in those questions, those comments. We do love to hear from you guys. And joining me on the program today, got my usual cohorts, my partners in crime. Let's start off in the land of all things pickle. At least it wants you to believe it. In truth, they don't really make any pickles there. It's St. Charles, Illinois, where we are joined by Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program, sir. And how goes the umbrage?
So far so good. I mean, I'm a forgiving kind of guy, but just don't tick me off.
There you go. Well said. And also don't talk about pickles. It's a sore spot with all you St. Charlesians or whatever you refer to yourselves as. And also joining us from much farther away in an area that was only recently incorporated into the United States, still working on the running water, the Duchy of Maine, where we are joined by the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, to you as well.
Thank you. It's the height of mud season here in Maine right now. The tippy top peak mud season this week.
This is a thing, mud season?
Oh, yeah, for sure. It lasts about 2 weeks while...
You go off-roading in your car? Is that what you do in mud season?
Well, you might sink in the mud. Because the snow is melting, everything is thawing, and it could be, if you go off the beaten track, it could be quite gloppy. Quite gloppy.
Mud season. I grew up in New England, and I'm not familiar with that term. Perhaps you guys out there in your land of not paved roads in the Duchy of Maine, maybe you have your own seasons unto yourselves. Either way, the team is assembled. It is time for us to commence, so let us get right into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. As Nan said, this is the portion of the show where we break down what was lighting it up in today's market activity and net close to close not a heck of a lot lighting it up. Even though we did have a nice little run there for a while. But yeah, actually, looks like about a 22 handle range in the SPOOs. Even though net on the day kind of closing pretty close to where we were. So interesting stuff nonetheless. It's one of these. We're in this interesting period. We've been talking a lot post election, post Trump, about what his impact will be on volatility, what his impact will be on the broad market, and so far it seems has been one directional. The market goes up, vol goes down. This past week or so, we've seen a little bit of maybe the first chinks developing in that armor, volatility creeping up today, notwithstanding, and of course the broad market perhaps showing us out to be a little bit nervous, a little bit top heavy. We had the healthcare bill and other things kind of creeping in there, casting some long shadows of doubt out there. So it's been interesting to watch how that plays out in the old marketplace, and again the old VIX cash. Also giving up a little bit of the juice, the premium that it had gathered last week. Back shy of the 13 handle, right around 1255 or so, which actually looks pretty good. I believe that was almost exactly my prediction for vol view. So let's just freeze it and lock it right here for the rest of the week, and then I should be all set for vol views. But that said, a lot popping off in the broad macro spectrum, and of course the political spectrum, and it all feeding back in to the marketplace. So maybe we'll start there, Mr. Rock Lobster. You missed a fun vol views on Friday. We talked all things, as we were wont to do on that show, all things VIX cash and VIX futures, a bit of international vol as well, thanks to our friends over there at MSCI. So it's been interesting to watch. What do you make of this resurgence in volatility we had over the past week? Is it too much, too little, too late, more than you thought, not enough? What do you make of it now that we're giving up a little bit of back today as well?
I was just having this conversation with our chat room. Like I thought the vol would sort of slide back a little bit without any real action, but it actually went down quite a bit more. I mean, the May if you close your eyes and guess, okay, May is almost 2 cycles away. What would the May future be trading for right now with VIX trading 12.5, right? Where would your guess be?
Well, the premium was about 2.5 handles. It's less than that now. I think it's like a 1 1/4. So I'm going to say about 13.75.
Right. So, but doesn't that sound low for 2 cycles away for a VIX future?
Yeah, all things have been wonky in VIX futures land of late.
Yeah, I mean the May's 14.10. It actually traded below 14 for a few minutes. Today, closer to the end of the day, I can't believe it's that low.
I was close, only a quarter off. There you go. My futures prognostication
you
still
did very
dialed
well.
in. Still dialed in, baby.
But normally that would be a $15 future right now. So they are not, the future traders are demanding very little premium for, today they went completely backwards. The futures, they moved higher, but nothing compared to that rocket shot we had in VIX over 14 and change or so. So I think what's happening is the market's really ready to raise the vol, and then as soon as you have one uptick, they crush it. So I don't think the vol regime has changed. Maybe just the market I think they had maybe higher expectations of Congress actually being useful, and the only thing everybody realizes that, Congress really isn't that useful. They don't really change very fast. They don't really do much except spend a lot of our money. And we got no laws passed now. Let's see if they can pass something else. But I think I think that we had the sell-off from sort of the crushing of higher expectations, and now everybody's just got the normal congressional expectations, which is basically nothing. Nobody expects Congress to do anything useful, and they are now back to living up to that current expectation. So, and that could just plunge volatility again. The French, I think the only other volatility thing was kind of the French elections, and that Le Pen lady went over and shook hands with Vladimir Putin, and then he went and cracked down on a bunch of dissidents again, just because he's such a nice guy. So maybe that PR move didn't work out as well as she wanted. But be that as it may, they took vol down pretty hard, although we did open. We looked like we were going to open down around 1%, and it lasted for about, I don't know, 5 minutes maybe. And then right away, all the walls started coming right in again. So I thought things would just kind of drift lower, and apparently the volatility wants to move lower faster. So all I can say is get out of the way.
You know, we talked about this before. We joke about this on vol views all the time that, you know, vol traders in particular, it seems like, are just a skittish bunch. They're schizophrenic, bipolar, call them what you will. They got to have it. They got to have it like they had to have it last week. And then once that mood strikes them, they don't need it anymore. They don't want to have it anymore. They will crush it. And they crush it at weird, seemingly inopportune times. How many times did we talk last year crushing vol ahead of Brexit, ahead of the election, when it seemed like polls for both of those showed the opposite result was going to come to pass, and it was pretty much a done deal. And we kind of scratched our heads at saying, man, they don't seem to be very reticent about dumping all this vol. So it's an odd marketplace. It's certainly an odd bunch who got to have it. Oh, got to dump it. And today, apparently, in the latter category. Uncle Mike, what was catching your eye in today's activity, sir?
Hi-ho Silver, it is back. Silver went on hiatus.
Were you doing something? Are you doing something in the collar? Can we talk about it?
I thought about doing something today, but I decided against it.
I thought about doing something. That's the headline. Uncle Mike, I thought about doing something. Then I went back to bed.
There's no strategy block today, so I decided I wanted to wait till Thursday for the strategy block to think about it again.
Okay, fine.
So that's what I thought about. But anyway, with that, silver is coming back right now. It's above the 17 level. That was one thing that was strong throughout the day. If you look at a daily chart, I'd just like to add to what Andrew said. Markets gapped down and then came up, basically. Same held true for oil. Oil was down a little bit, and then oil came up with the market as the market was rallying. A lot of this, just to add to what probably a lot of people have seen throughout the internet, throughout the day today, is there's the perception also of the healthcare bill. Now, I know Andrew had talked about Putin, but the healthcare bill, I don't think this is necessarily a huge blow to the Trump administration. Now, the Russia stuff I think could be, but the healthcare bill not passing or getting killed before it went to the vote, I don't think that's going to be that big of a deal for him politically, just because of the fact that it's not. I don't think it's as much of a priority for Americans as tax reform is. And the other part of it is that we were very divided, and I said this on the show last week, we're a very divided nation when it comes to health care. We were when the Affordable Care Act was put into play, was voted in, I believe, in 2010, and we still are today. So that's going to be one of those things to where it's not going to be easy for him to do what he wants to do just because we are such a divided nation on that. Now, with that, markets came up when when the cash market opened. Some other things that came around or that had happened today were in the precious metals. Like I said, silver was up a lot. Gold was up a lot today. So those were coming up on the day. We have a lot of things that are possible for being big market movers coming up, not the least of which is a lot of the things happening politically. But when we have another earnings season, if we have good earnings, we're right near the highs. And the market does need, I believe, some type of catalyst to get over the all-time highs again with the SPX, to get over 2,400 for the Dow, to get over the 21,000 mark. For all the moves that we have and that we want, there's going to have to be some type of a catalyst on it. So with that, I think right now, if you do want to be a buyer of this market, the one of the sectors that really sticks out to me is the financials. They've gotten the tar beat out of them the last few weeks. And if you want to be a buyer of the market, that's one that's definitely on the lagging side of it, based on everything that has come about recently. Now, let's say we do get tax reform. Let's say we do get some financial regulations eased a little bit. That could be the catalyst for growth that the market's been looking for. Now, even with this pullback that XLF has had, it's still up quite a bit over the course of the last few months. So, yes, I'm a bull, and I am not ashamed to admit it.
You should be ashamed to say you live in St. Charles, though, because of all that great pickle controversy that still hangs over your heads out there. But, another thing that's kind of lurking over our heads, we were just talking about VIX earlier, and it does seem like we're in that era again, in that regime. And Mr. Rocklops, you probably have noticed this as well, where we get these rapid movements in VIX, and all of a sudden we start seeing all these articles and papers. A lot of people had, I think Bloomberg, Market Watch, a bunch of others last week, they're trying to use all these legacy technical analysis techniques and trying to apply it to VIX. This is something we talked about before on Vol Views. It's been a while. I don't think we've touched on this program in quite some time, but it is probably worth, I think, discussing again. This kind of always just raises the hackles on the back of my neck because they're looking at VIX like it's just just a regular old stock that's just sitting there, and it's got its Bollinger Bands and it's got its 200-day moving averages. In fact, who was it? I think it was Market Watch. You were going on about VIX jumped above its 200-day moving average for the first time since December, and all these big historical levels and this stuff kind of just makes me chuckle. The notion that VIX is this kind of independent trading entity with its own vagaries and whims, as opposed to what it actually is, which is, of course, the implied volatility of yet another derivative with some other little incarnations thrown into the calculation to make a easily digestible number. Now, taking that, a derivative then of a derivative, and trying to apply legacy technical analysis levels and meters and indicators to that always kind of struck me as a fool's errand. We talked about, I think, a while ago, Mr. Rockloff. It's probably worth discussing this again. I have the feeling that you're going to be on my side of the fence, but who knows? Maybe all those crazy folks in your chat room have lured you to the dark side of technical analysis, and now you're just loving your Bollinger Bands and VIX. So what do you think about this whole? And we're in this period now where it's the popular thing yet again to use technical analysis to break down VIX. Where do you fall in that debate, sir?
Well, because it's moving. What were all the technical analysis people doing when the range for VIX was 11 to 12 and a half for a month?
not very exciting for those indicators then, was it?
I guess I don't really know. I have to be honest. I don't really know how technical analysis works. Do they look for something to move and then all of a sudden that triggers another move, I guess, because I guess you need a higher high to trigger a new high, or a new high to trigger a higher price, or
how it works. They see a movement in the market, and then they go back and drop a chart that says, "Look, I told you so." That's how it works. That's how it works, right there.
See, this is what I said. So,
and then they sell software.
Yes, with green triangles pointing up and red triangles pointing down, and you spend about $3,000 a month, and everyone's happy.
I guess that's the gig. So I think you could look at just volatility charts as a place where, okay, well, this is about how low vol can go. I mean, I don't know what the charts were saying for VIX when it was trading, for 1065. Oh, it's going to go to 8.5. How's it going to get down there? I think that would be impressive. So right now, I think the fact it's always important that when VIX moves up, that can bring bigger movement because that means somebody's buying options essentially, and the market's moving. The thing is when there's no follow through, like we were just talking about how cheap the May is. I think the May is very cheap. The May cycle is, but I don't, unless something happens with this French thing, I'm trying to come up with a reason for the vol to actually move. So I just think this was a little bit of a move based on some I think the market got really happy with anticipation, and the market can be very fickle, and when it gets unhappy, they smack it. So we're not seeing any as far as a big breakout in VIX. I mean, I guess it could happen, but now you need a reason. I'd like to see what their indicators said. Okay, we're going to see 16 or 17 or, it takes a lot. It's hard for VIX to go to 16 when the net move on the day is 2 handles for SPX. I don't know how you do that, but maybe it'll happen. Maybe, I guess.
Let me, before Uncle Mike jumps in, let me just say here, the one I have in front of me is the article from Market Watch, one of the more recent to write about this. I think it might have been today, or I think it was Friday. And there was their conclusion after VIX breaking through the 200-day moving average, which at the time was about 13.5, first time since December. They came in and said, in their view, broadly speaking, moving averages are used by technical strategists to help judge if short-term and long-term directional momentum in a security is intact. So according to them right now, the VIX is creeping toward their long-term average, suggesting that it could attempt a firmer breakout, to use the parlance of chart watchers. So there you go. They say all this breaking to the upside means VIX is in for rocket ship mode in the near future.
Here's what's tough about that.
Okay.
Okay, so you don't see technical analysts doing technical analysis on a mutual fund. And the reason is because there's a lot of moving parts within a mutual fund. You don't know, let's just say that I'm a fund manager and within my fund, I have 100 stocks within my fund. And if that's the case, you can see the daily, the NAV, the NAV price of the fund from day to day on a chart. But the reality is that there's so much going on for why I may buy or why I may sell a certain stock within my fund. You're not trying to predict a buyer and seller of one stock or one index. You're trying to predict exactly whatever the heck I feel like doing as the fund manager. And I also think that, just to add to what Andrew said, within the VIX, there's different things that factor into the VIX, obviously, with different option pricing. And I'll save it for VolView for all the, if you want to get very technical into how the VIX is calculated. But let's say for some reason that there's more buyers of vol and sellers of vol, but there's a lot of moving parts within what type of vol and what options people would buy within the VIX. So I think it's very difficult to try and do technical analysis within the VIX. Now, granted, you can maybe get some type of a rough idea of it, like when the VIX is at the lower end of its range, but that's really not something that you're going to see. You could see that just by looking at the prices of it and the 52-week highs and lows. So I think I'm with you guys in that I think it's a very difficult way to try to predict the future is by using Bollinger Bands and moving averages on the VIX.
People seem to be agreeing with us. They're tweeting in. This is Stephen Place. He says, people should stop looking for patterns in the VIX. I'm with you. I think we're buying what you're selling. That's kind of what we've been selling here as well. VIX. I think the analogy of an NAV is an interesting one. I haven't thought of it in those terms, but it is an analogous situation, even if there are some different things. You still have this, obviously NAV isn't really a derivative in the same sense, but you still have this kind of obtuse calculation that is determining its value at the end of the day, and VIX obviously a similar beast. Not the end of this conversation, not by a long shot, but I'll probably get more into it in VolViews, or maybe the show later this week. I just thought it seems like all of a sudden we're in that climate where everyone and their mother is putting out articles about this stuff, and so it's worth at least pondering here on the program. Speaking of pondering, it's time for us to kind of stroke our chins and say, as we look at some weird trades, it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, that funky music means it's time for the funky portion of the show. It's time for the Odd Block, the portion where we break down the weird, the wild, the whimsical, the bizarre, the head-scratching paper that is lighting up the market today. It's got some weird ones today, so maybe you guys out there can join us in the analysis and in the conversation. Agree, disagree, let us know. Hit us up at Options on Twitter or on Facebook, or just questions at theoptionsinsider.com, or just use the feedback form that a lot of you guys like to use as well. However you want to hit us up, we are open to your suggestions. Let's kick things off here. Unless they're very rude about Andrew, then just send them to him directly. We don't need to be intermediaries for those. All right, moving on. Let's kick things off. If you're saying to yourself, what was cooking in the regional banking ETF today? We got you covered. Of course, this is the SPDR KBW Regional Banking ETF, ticker symbol KRE, because of course, closing 52.78, off about 0.5% or so today. This is the name that does about 23,000 contracts a day, doing a little bit more than that today, doing 71,000 contracts. Of that 61,000, so effectively 6-to-1 puts over calls today. That should tell you pretty much where our attention was drawn. It was pretty much all puts all the time out here in KRE today. Let's start off with the longer term ones. That's kind of what first drew our attention, our eye of Sauron fixed upon them. It was the May 50s and the May 45 puts. Both of those lighting it up. Both of those looks like they were going up. They were going up for $1.12 and 28 cents. 3,000 and change both times. About 3,200 on the 50 puts. About 3,500 or so on the 45 puts. These went up through the bids, so pretty aggressive selling out here. We also saw open interest, by the way, on those strikes about 1,000 change each, so clearly opening on both. And we also saw, continuing the put palooza out here, we also saw trading in the April puts, the April straight up April puts, 50 and 53s out here as well, to the tune of about 3,000 of those. About 2,700 of the 53 puts. Those have a little bit more open interest, about 10,500 on the 50 puts in April, and about 7,000 and change on the 53 puts in April. So has the look, has the feel of a bit of a roll out to a little bit more relevant strikes here, a little bit more out of the money strikes here. So again, got the 50s and 53s clearly in the money, the 50s a little bit close to the fire. Our friend not too concerned about that, keeping the 50s alive going out to May, and also rolling the 53s down to the 45s as well, getting a little bit maybe scared of having some in the money puts, short puts there on his balance sheet. Looking at the year that's been so far here for good old KRE, we have a nice swift pop heading right around the time of the election. Imagine how that happened. Like, it's like something crazy happened on the 4th of November, right around that time frame, and everything just kind of rocketed up ever since. And so that's exactly what we have playing out here in KRE, which was hovering around 43.5, and then post-election kind of straight up got as high as about 60 back in the first week of March, so almost a month ago. Then it's kind of been trailing off, like I said, hovering today right around the 53 handle today. So Mr. Rockloff has been an interesting one. It's been kind of all over the place. This guy was playing with some protection on the 53 strike and the 50 strike, deciding against the 53s. Looks like reestablishing out on the 45s and the 50s for next month. Is that what you feel as well? You think there's perhaps more to this one?
So this was my question, all these puts. It was kind of a flurry of puts, and they all traded through the bid. So, when you're on the floor in the old days, did that used to happen often? I'm gonna put up a 4-way spread, and it's all going up through the bid because we got nothing else better to do. Maybe the market moved by the time they posted it. I don't know. It had all the look of, okay, we're trying to close some of our April puts because it seems like they got sort of a kind of a quick brush down. And then they're rolling into May puts, maybe trying it again. So the April looked closing, the May looked opening, and I think they're just trying to raise some juice dollars. They're just taking small bucks off the table in April, and then selling May. It's just the pricing was very funky for stuff that's printing. I guess because the market. Basically, they sold. I think they closed the April, and then, the May everything just popped, or the KRE just popped right after that. So, by the time it hit the tape, all the pricing was different. So it's just one of those. Well, it's an odd. It looks like it was odd the way it was printed, but it had the feel of just kind of a put rider. Those initial trades, trying to get out of April and then into May, but just really bizarre. That's all I got. It was just a bizarre multi-leg KRE put trade that all traded through the bid.
Bizarre multi-leg funkalicious put spread. Let's just call the technical term, sir. Yeah, and you're right. It did not happen very often when I was on the floor that someone would come in and just print everything through the bid. Not always the case there. Didn't see that very often, but c'est la vie. Things are funky these days, and markets move, and the prints sometimes look weirder than they appear on the surface. But either way, this is a funky one. If that wasn't enough funky 8 May put spreads for you, don't worry. We got you covered. We got more next up in GoldCorp. Ticker symbol GG. Closing today about $16, up about a little over 1% on the day. This is a name that does. How much do they do? They do about 19, almost 20,000 contracts a day. Today doing a fair bit more than that, about 51,000 contracts, about 44,000 puts, and almost 7,000 calls, so almost 7-to-1 puts over calls. And that, once again, is where our Eye of Sauron was drawn inexorably this afternoon. Starting off, let's start with the April leg first. It was the Ape 15s going up. Looks like, puts by the way, of course, looks like paper selling and then turning around and saying, you know what, I still like this 15 strike. So I'm going to come back on May and I'm going to buy me some of them May 15 puts. Doing that about 20,000 times. That went up in 2 blocks over on the Philly marked spread. Looks like April, again, selling, buying the May, doing it net for 23 cents. Open interest on the Mays just shy of 4,000. Open interest on the Apes was 36, almost 37,000. So interesting stuff here. Obviously, our friend here looking for a little bit of protection and paying up about 23 cents to keep the protective party alive throughout May expiration. Let's see why our friend may be doing such a thing. Looking back here at the year that's been out here in GoldCorp, been a bit of a tumultuous ride, flirting with 20 back in mid-summer of last year, then flirting with a 12 handle on the downside towards the end of last year. So as you might expect, with all things shiny stuff last year, it was a bit of an interesting roller coaster. And this thing has kind of been on a nice little tear ever since December, getting as high as about almost 18 before selling back off again down into the mid-14 handle again. So it's kind of been vacillating all over. Now it's been on a little bit of a tear since mid-February or so. Our friend here obviously wanting to keep his money in his pocket. Should the worst come to pass, should this thing sell off again back down to the 12 handle. This has all the looks, all the hallmarks, Mr. Rock Lobster, of a long underlying holder who's keeping a little bit of some put love in his back pocket, saying the 15 line this far and no farther. Do you concur, sir?
It seems like that's what it is. There's 36,000 open. Again, it's 2 trades through the bid. I just a little wacky, or right into the bid, and how much are they making on the Ape on the April 15 put that they're closing for 17 cents? I don't know how much you can make on that. So I think they might be just taking their chips and rolling to another month. As far as I could tell. It looks like everything picked up a little bit of a bid sort of after these things traded. So, I generally go with how the market prices things afterward. All of a sudden, they're all bid up. So that usually means that liquidity providers had to sell. And the customer somehow got a good purchase, maybe because they sold the other puts down into the hole to close. So that could be how they're pricing things these days. But again, an odd roll for, just really printing at not normal prices, I would say. It's like, I guess trades are going up now with negative edge and through the bid, and nobody else can trade them, I guess.
Good time, sir.
No wonder why Timber Hill got out of the business. So we give up. This is because somebody's willing to take the other side.
This doesn't make you long for the old days, sir, of standing down there, having this just rammed down your throat?
I have to say it does not. My view in Maine looks much more pleasant right now, even though it's mud season.
You don't like staring at the backs of angry, sweaty, sometimes gaseous men for hours at a time while this paper comes in and is just thrust upon you. That doesn't sound like a fun way to spend your afternoon.
Not not as much. Not when everything's trading, a dime through the bid, and I got to sell that. It's you know what? If this show wasn't called the Odd Block, I would name it the Odd Block, because these are some odd blocks.
These are indeed some odd blocks, and let's finish it up here with once again our eye of Sauron, the gaze of Mordor drawn once more. This time, all puts today, Put-Palooza. This time in Bank of New York Mellon Corp, ticker symbol BK. No, not Burger King. That'd be too fun. It is Bank of New York Mellon Corp. 46 and a quarter is where this thing closed. Looks like pretty much unched on the day after having a little bit of a range. Closing again about unched. And this is the name that does about 3,000 contracts and change, doing about 11,500 today. So again, high volume for all the names we're talking about today. Again, puts leading the dance, about 10,000 of that 11,000 and change coming on the put side. So that was where our interest was drawn. This time we're not going out to any funky months. We're going just straight up all in 1 month. But if you think that's not funky, you can get a little funky. Just wait. What started off our attention here were the March expiring on the 31st. So these are the end month weeklies. 44 and 44 half puts going up for 19 and 21 cents respectively. 1,710 times total on the day. Those went up in one block. Over on the Amex, another couple of strikes went up a little bit later and a little bit out of sequence with those. These are the March, again, same month, so expiring 31st. 46 and 46 half puts also going up. So it looks like those went up about 1,800 times and change. And the open interest on those is about 1,700 and change. So there's a little bit extra on there, but seems pretty close overall. And pretty much zero open interest on both of those March put strikes to the downside. So weird stuff out here with stuff going up out of sequence. Again, this name closing 46 and a quarter, so kind of right in between, actually, those two other strikes. Maybe our friend here deciding, taking a little bit of his house money off. I don't know if it's a ton, because these things are only 25 cents in the money, but still, taking a little bit of these puts off and then perhaps reestablishing this is a vertical or perhaps a funky stupid here. Very tight one either way, 44 half. So this has been kind of a funky one, again, keeping with our funky put theme here today. And this is the name, we've talked a lot about banks over the past few months, and BK has had a tumultuous ride as well, going back as far back as down about $36 to about $36 back in early April, it seems like, of last year, and then getting as high as 49 or so, almost 50 back in November, early December, and then kind of vacillating all over before settling out right now, kind of in the middle of that near-term range, 46 and a quarter. Mr. Rock Lobster, take us home. Another weird one. This weird put-palooza today is kind of the theme of our odd block. What do you think our friend is up to? We got some paper going up on these higher strikes, so it could be closing, but it's a little bit more than the OI, but still, where there's smoke, there's usually fire. And then you think he's just closing one stupid and opening another, or a really tight spread? What's he up to?
I think because there was the two blocks of the 44 and 44 and a half puts, it looks like somebody paid up for those in the morning when Mellon was trading closer to 45, and they're basically worthless now. So the only thing I could think of is, one is because the March 46 puts traded around 90 cents, I believe. So it was a pretty good price for those at the time. So it's almost like somebody might have closed, because things went out of sequence on the open, so there's literally like a zillion prints for these puts. Or I shouldn't say a zillion, but twice as many as the volume went up until they settled on what the trade was. So it appears that they're closing the 6.5 put and then rolling into the 44 and 44.5 puts, kind of taking all their money and just sort of doubling down on the way down. That's how it appears. And as of right now, the March 31 44 and 44.5 puts that they paid average about 20 cents for the two different strikes are just smoked out and gone. So if that's any inclination of what's happening to the volatility right now, I think a lot of this put trading was where there was an opportunity to close puts. I think it kind of happened all the way down the line in our examples at really weird prices because I think the market just launched straight up in everybody's face. By the time all this stuff went on the tape, all the pricing was goofy because, we kind of had that bounce and the vol got smashed. So that I think explains today's put palooza bizarro extraordinaire for our unusual activity.
I couldn't agree more, but we're not done with the bizarre stuff yet because it's time for your questions. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is indeed the portion of the program where you guys get to take the reins. We also discuss some of your questions and comments and your answers to the questions that we ask you guys. We got a big question raging right now, has been for a couple of weeks. It is, who will win our options broker madness, our broker battle royale, call it what you will. Every year now, at least for the last couple, we've been pitting all of the top 16 options brokers against each other in a bloody battle to the death. There can be only one, and we are approaching that momentous occasion now. We are down to the final four, so we'll have our final two battles before we finally get into the ultimate showdown. Let me just ask you guys, if you guys had to pick right now, who do you think, because I'm guessing you're going to be surprised by the results, who do you think made it into our final four? And then I'll give you the actual standings. So I'm sure you guys haven't looked at our Twitter, so you haven't cheated. Uncle Mike, we'll start with you. Who do you think our final four standing in our broker battle palooza are?
I'm sorry, what were the choices again? I screwed this up. My apologies.
I'm not giving you any choice. You have to just guess. That's the fun part.
Just a random guess. Okay. I'll go with Trading Block, Interactive Brokers, E-Trade, and Trade King.
Interesting. Mr. Rock Lobster, where do you fall, sir?
I'll do TD American, Ameritrade, Options Express, Live Vol. What is that?
That's light for our purposes of
Live
our
Vol
poll.
X is Lightspeed.
Yes, Lightspeed. Yeah.
I will go Trading Block.
Both of you going Trading Block, which knocked off IB in a nice little Wisconsin type upset here in our own brackets to make it into the final four. So our final four are Trading Block. And then Options House knocked off Trade Station to make it into the final four. And then in just a battle royale, a slugfest, going back and forth, Trade King versus Lightspeed. That was a fun one to watch. Both of them kind of bringing out all their guns, really trying to win this thing, which is kind of fun to see. Lightspeed edging them out in an epic, taking out last year's champ, Trade King, which is kind of interesting. And you were right, Mike, about E-Trade. They are in the final four as well. So we could potentially have an E-Trade versus Options House showdown, which they were actually tweeting about last week, which would be kind of funny. So yeah, I don't know how that would shake up. That'd be kind of interesting. So yeah, our final four, Options House versus Trading Block, which is happening right now, as well as Lightspeed versus E-Trade. That is coming later this week. So if you have an opinion, you have a vote, who you want to see, you like a broker, maybe you hate a broker. Either way, let them know. Tweet it, vote, polls, obviously. Tweet it and retweet. If you guys want to win prizes, we do have prizes associated with this. You can win all kinds of cool stuff. Cool Options Insider gear and swag. You could win cool, boxes of stuff that we get from throughout the industry, which is all kinds of cool, cool tchotchkes. And as well as even a nice little Echo Dot there if you like your personal assistants from Amazon. Who knows? Maybe someday you can even trade through that thing. Who knows? So all sorts of fun little prizes. In order to do that, you have to have something we could track. So you have to retweet it. You have to like it. You have to do something maybe on one of the other platforms like Facebook. You can vote there as well as on StockTwit. So whatever your platform of choice is, or even hit us up with an email if you're really desperate and you don't use any of those other platforms. Either way, get your votes in and get yourself registered to win fabulous prizes, and we'll pick all those winners when all is said and done. Meanwhile, you guys still have a job to do. You got to go pick our winner. So get out there in the true Chicago style. Vote early, vote often. Pick a broker you like, vote against one you hate. Either way, get out there and mix it up. This will be wrapping up around the time of the tournament wrap-up. So come in soon. Should be interesting to see how this shapes. Already last year's champ unseated. So who knows? We're in uncharted territory going here for 2017. All right, got a bunch of questions. Here's an easy one. Kind of touched on this, I think, on Volviews a couple weeks ago, but we haven't touched on this show in a while. Probably worth bringing up again. This comes from Zanzibar. I like that. He, or perhaps she, asked, what is max pain and why does it matter? You know, it seems like maybe it's along the lines of the VIX stuff, Mr. Andrew. It seems like, I don't know, once a quarter or so. Usually on expiration, this kind of question raises its ugly head, so he's a little off cycle here. But still, we have to answer this, every few months, kind of debunking our max pain. I know you feel like I do. I'll answer the second part right now. Doesn't matter. Not really, unless you're talking very specific scenarios around expiration. But I know, Mr. Rocklop, so you have some thoughts on this. So explain what max pain is for our friend Zanzibar, and then, of course, agree with me that it doesn't really matter.
I'm thinking max pain is.
Don't be confused by the awesome Mark Wahlberg movie and the video game with the same name.
Isn't that the max loss you can have on a trade? I guess. I have to admit, I'm at a total loss on max pain.
Oh well, there you go. You're too distracted by the games and by the movies. Now, this is, of course, this kind of correlates. This is another way of asking effectively. When people always write into us asking us about, high OI around expiration, and does that have this magnetic gravitational kind of force attraction? Does it make the markets jump, 20% to the high open interest strikes? Max pain is kind of a similar side to that coin. Does these strikes of these maximum, concentration strikes, or is that what really drives the market around expiration? So if it helps you, you can think of it in those terms, or maybe Mr. Uncle Mike, if you have thoughts on this as well.
Yeah, it's about pin plays, and all I can say is sometimes it does and sometimes it doesn't. That's the only thing I would say is that when liquidity providers have a lot of, if they have a lot of the strike, they tend to scale orders around the strike, which could keep it pinned. But if the market moves, and it makes the liquidity providers really happy. So I would say is if you trade if somehow you're good at trading it and you figured out a way good, I've never been able to really see it do anything, at least statistically, that made it interesting around the strike. The fact that there's a lot of open interest is going to pin there. Sometimes it does and sometimes it doesn't. I wish I had something for better than Zanzibar there because those handles so good, but not that I've been able to find out or do.
Yeah, it's a good handle. I agree. This is not one. This gets tossed around a lot, obviously, and we've talked about it before. I won't belabor it. There's this magical belief that options rule all other markets and they move the stocks whither they will, and that doesn't really work. It'd be cool if it did, but not really. And Max Payne, a similar take on that. I think this is. I hope this guy's. It might be a joke. I don't know, or maybe he's serious. I don't know. It's like this comes from Voice of Reason, and he or perhaps she saying options seem far too complicated, too much thinking involved. I follow the penny stock community. They are usually dead accurate. I'm gonna go out on a limb and say he's being a cheeky monkey, as the British like to say. I don't know. Uncle Mike, you do a lot of penny stock analysis over there at RCM?
Let me tell you about my experience in penny stocks. Many years ago, when Mike Cavanaugh and I were still in the office that was about the size of a closet, we still had our Series 7s, and so someone came to us and said, we're going to do a lot of action for penny stock trading. We're going to do a lot of trading, and you guys just have to help us execute the trades. And, that's what we do. And so after about a week, we had to shut it down. And what we realized in the penny stock world is that if they're not listed, a lot of times the old pump and dump it's kind of legal. And so we got out of that in a hurry. We didn't even have any of our clients in it or anything. This gentleman brought he was trading his own thing. And what happens is that someone will put out a newsletter saying, buy this stock. It's a great stock, after they already own it. And then through this newsletter, people buy that stock, artificially increasing the price. And then the person putting out the newsletter then sells it to them for a higher price. And so sometimes the stock gains momentum and continues to go higher. Sometimes it doesn't. But that's not a very pleasant game. We didn't really do a lot with it, but when we saw what was happening, we quickly got out of it right away. So the penny stocks it is the Wild West, and I would recommend staying out of them unless you maybe own the company and already and want to have exposure to it until it becomes a much greater priced stock. But I'm very much frown on penny stocks.
Yeah, I'm going to go out on a limb and think Voice of Reason here was being sarcastic. I'll give him credit for a nice, clever, subtle, maybe British, dry sense of humor. All right, let's move on. We got one more here. We got time for one more anyway. Let's do a nice, easy one here. This comes from Symphox. He wants to know, got good handles today. He wants to know if you trade options correctly, is it true that you will always have the advantage over outright stock purchase / shorting? Well, I think you can take from the name of our show and the fact that we don't talk a lot of underlying on this show. It's not the stock block, after all. It's the option block. That we don't do a lot of underlying slinging, probably for reasons you might be able to guess. Yeah, yes, in most scenarios, the options will probably be the preferable way to go, whether it's from a capital efficiency perspective. You're putting less money to work. You're required to put less money to work, so you have more capital freed up to do things, whether it's from a leverage perspective, whether it's from even, you're talking about outright stock purchases and shorting. So even on that basic level, if instead of working limit buy and sell orders, you're writing puts to get in, writing calls to get out, just doing those simple things will dramatically improve your returns over time. I say not always, because nothing's 100%. In those selling puts and calls, for example, in those scenarios, you have the one example everyone always brings up of gap risk, and you do have that. If something crazy happens overnight and you're short the put, you will end up wearing that the whole way down, or vice versa. Whereas the stock, if you had a limit buy, you would hope you probably can get a garbage fill, but maybe it would be somewhere in that range. So that's the one area where it could come back to bite you. But other than that, in those scenarios, if you're worried about that, of course, spreads are a good way to mitigate that. But that said, yeah, I mean, in most of scenarios, certainly the ones we discuss on this show, I think options are the way to go. Mr. Rock Lobster, what do you have to say here for our friend, Mr. or Mrs. Symphox?
I think that options, when used well, can certainly boost returns, but when they're used poorly, they do not. So just that I made most of my living in my life trading options, so I'm kind of partial to them, but you still need to know how they work. So I would say that. That's what I would say.
And Uncle Mike, take us home. I believe you have a quote to utilize on this one.
The Viceroy said it best. There's nothing that you can do with a stock that I can't do with an option. And if you really look into that, the only things and I agree with that, unless there's very minimal option liquidity, or you have a tax issue to where you want to hold the stock for a longer period of time and you're okay not using leverage, or if there's no shorting and maybe volatility's skewed in some way or whatever the case may be, there's exceptions. But I would say that most of the time, you're better off using an option unless you have one of the exceptions to the rule.
I couldn't agree more, sir. Who am I to argue with the words of the Viceroy? Now let's keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, this is the portion of the show where we tell you what we're keeping an eye on for the rest of this week. And not a heck of a lot on the earnings front, really. There are names popping off, but not a lot of the big ones unless you're really excited about Red Hat perhaps today after the close, or a few others out there. Nothing really leaping off the page at us out here. So it's still kind of wait and see. It seems like all eyes and the market-wise are really focused on the macro political environment over there in D.C. and how that may or perhaps may not accrete back into the volatility space in the coming weeks. So that said, let's start with you, Mr. Rock Lobster. What are you watching for the rest of this week?
I am watching Can the Vol Do Anything? After today, I think we have kind of a gridlock Congress, which generally, if they're not doing anything, is usually better than doing something bad. So, and I think that's kind of what our equity market is looking at right now. There's not a whole lot of news on the horizon, I believe. So as we sneak into earnings, if this French thing is a big nothing, I think we could see the 11 handling VIX again this week, and just piffly poo. And I want to see if the banks bounce a little bit.
Piffly poo, says the man. I like it. All right, Uncle Mike, what are you watching for the rest of the week, sir?
Well, piffly poo to me is what I say. We've had our pullback, and if we're not quite I believe we are. Yeah, we're not quite to the 5% level off of the all-time highs, but we're getting pretty close to it. So I'll be watching the levels on the markets themselves, seeing if anything happens out of Russia with these investigations. But overall, just seeing if any piffly poo happens to move the market.
All right, and that music means we've come to the end of this piffly poo, which would be the option block. An interesting journey it was yet again, kicking things off, talking about vol and VIX technical analysis and all sorts of fun things there, and the Trump effect, or perhaps lack thereof these days, getting into all sorts of unusual activity, KREGG and Bank of New York Mellon, getting into the Broker Madness member vote at Options if you haven't done so already, and retweet and like and all the other stuff to win fabulous prizes. We're coming down to the wire. The final four there. They're waiting for you guys to choose the winner. So head on over there if you haven't done so already. If you have, new battles today, so get in there. Vote early, vote often. All right, that said, let's go around the horn one more time, starting with you, Mr. Rock Lobster. What is cooking in Land of the Pit?
We do have our next masterclass coming up after Easter. Look for that, and I think that's about it for coming on the Land in the Pit. But we should see some more announcements coming out of us soon.
Stay tuned for all the piffly poo coming out over there at I almost said Option House, at optionpit.com. And Uncle Mike, take us home, sir. What sort of piffly poo is new with you?
Well, if anyone wants to save some piffly poo on their commissions, give me a call. We'll take the commission challenge, like the Pepsi challenge was back in the 80s. I think if you go with our rates through our umbrellas at TD Ameritrade, Interactive Brokers, and/or MoneyBlock, we might be able to work with you. And with all that money you saved, you can go to Amazon.com in the Kindle version and buy the new revised version of my book, Go Long: New Option Strategies for Buy and Hold Investors.
There you go. Check them out on Amazon. Mike Tusaw, Tosaw, if you haven't done so already. Price of a cup of coffee gets you the latest edition of his weighty tome. Check it out. I think you're going to like it. On behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. Of course, for all of you who can join us live, we love you guys too. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.